distinguished members of the cabinet, good evening. I would like to start by saying that the conflict between Russia and Ukraine does not involve us directly. However, because neither Russia nor Ukraine is a major trading partner of ours. Instead, the Philippine economy will likely be collateral damage. It is as if we are hit by a ricocheting bullet. These indirect shocks are likely to be felt through four major channels. Is there a slide? Yeah, four major channels. The commodity market, the financial market, investments, and the impact on our fiscal health. First, oil and food prices are expected to go up as Russia is the largest exporter of natural gas and wheat, Rodrigo, okay? While Ukraine is the fourth largest exporter of corn. As the conflict continues, Ukraine and Russia's main trading partners, predominantly the European Union, we look to trade with other countries such as US and China, where we are buying both wheat and corn, thereby pushing up the prices of commodities in these markets as well. Second, the conflict will also likely cause a surge in interest rates or cost of borrowing, which was already expected to go up even prior to the crisis because of the U.S. Fed's tightening monetary policies. The conflict will increase the perception of risk in investments. Third, investments are likely to decline or at least be on hold in the face of uncertainty, which may cause investors from the West to be more conservative or postpone their planned investments. Once sanctions are imposed, it will take a long time for investor and consumer confidence to return to normal. Lastly, all the aforesaid economic impacts will likely require government support to protect our vulnerable citizens and the critical sectors most affected by the crisis, and this will stretch our budget even further. However, I would like to emphasize that we do not expect this crisis to last very long. However, there may be some lingering effects. We have seen similar crises in the past, such as the Gulf War in 1990, the Asian financial crisis in 1997, the oil price shock of 2008, and also the first Russia-Ukraine conflict in 2014. And we have weathered all of these crises very well. We have experienced crises whose effects were more severe and direct to the economy, such as the Asian financial crisis in 1997 and the global financial crisis in 2008. These crises lasted much longer, and yet we were able to get through them. Based on these experiences, we are confident that we have the tools and the preparation necessary to help our people through this crisis. The following presentation of Secretary Chua will outline the Economic Development Cluster's recommendations to address these potential shocks. This crisis may increase prices across several sectors and thereby cause our inflation rate to breach our target, but with the measures that we discussed at the Economic Development Cluster, and which Secretary Chua will present, we are confident that we will be able to keep the inflation within our target range of 2 to 4% and maintain our growth path of 7 to 9% this year. So can I ask Carl to go through the details?
Okay, thank you very much, Secretary Dominguez. Good evening, Mr. President and members of the Cabinet. The Economic Development Cluster of Cabinet met this afternoon, and we are proposing 14 measures to alleviate the impact of the crisis on the people. So let me go through each of the 14 items. The first is on the overall economy, is to shift to alert level 1 at the soonest possible time for the entire country and open all the schools for face-to-face learning to increase our domestic economy and offset the external risk. So while we cannot prevent the risk from coming from the global perspective, we can strengthen our domestic economy to provide the people with more jobs and opportunities. The second one on gasoline and diesel, as you know, the price of gasoline and diesel